Hello all, and thank you for joining us today. We are excited to have Boris Ilyevsky joining us today. And Boris is the Chief Product and Strategy Officer at FairX, and he will be presenting Breaking Boundaries, Oil is Open for Business. So just a little bit of background, the FairX is a new futures exchange, and it's offering smaller futures contracts designed for active individual traders. And Tradovate has been one of the first brokers to offer trading on FairX from day one when the exchange launched. Tradovate is also the first firm to announce commission-free trades for FairX futures for its clients. So when trading FairX contracts with Tradovate, you are paying zero commissions and no market data fees. In addition, through the end of 2022, we are waiving the exchange, clearing, and NFA fees. So apart from the Bloomberg US large cap and the SuperTech index contracts, FairX has also launched a new micro-sized oil futures contract. And I look forward to Boris explaining more about this new contract today. Before Boris starts his presentation, let's just go over the standard disclaimer. Let me just pull that up. There we go. Okay, so brokerage services are provided by Tradovate. Tradovate is a member of the NFA and registered with the CFTC. This is not an offer or solicitation for brokerage services or other products or services in any jurisdiction where Tradovate is not authorized to do business, or such offer or solicitation would be contrary to local laws and regulations of that jurisdiction. Futures and options trading involves substantial risk of loss and is not suitable for all investors. And investors should understand the risk involved in trading and carefully consider whether such trading is suitable in light of their financial circumstances and resources. Past performance is not necessarily indicative of future results. And just for this particular contract, no exchange, clearing, and NFA fees through December 31st, 2022 for FairX futures specifically. Okay, after the presentation, we will open up for questions. Feel free to use the Q&A section in Zoom to ask any questions during the presentation, and then we'll go through those at the end of this probably 20-minute or so presentation. All right, we would like to now present Boris Ilyevsky from FairX. Welcome, Boris.
Thank you so much. I am really happy to be here with all of you. My name is Boris Ilyevsky. I'm the Chief Product and Strategy Officer for FairX. As mentioned at the top, we are a new futures exchange specifically designed for the retail trader. We launched back in late June, so we've been live for a few months now. We're very much thankful to have all of you here. Wanted to thank Tradovate as well, as mentioned before, our earliest and first adopter broker that made our products available on day one. We very much appreciate it. And again, offering all of our products with zero commissions, including NFA fees, routing, any kind of clearing fees through the end of next year. Again, just wanted to go through a little bit of background about our exchange and then focus on our Micro Crude Oil futures contract. We launched, as I mentioned, back in June. We are a 23-hour futures market, and our current product offering is focused on a couple of broad-based index products. And our most recent addition is the focus of the webinar today, which is our Micro Crude Oil Futures. But right now, what you're seeing on your screen is the FairX website. So these are not really prepared slides. This is our live website. Wanted to give you a quick overview of our existing products, such as the Bloomberg US Large Cap, which is a broad market index of the 500 largest companies by market cap. It's very closely correlated to the S&P 500. We have a SuperTech index product, which is an index made up of 15 of the largest and most liquid technology names, kind of like a FANG index, but also includes stocks like Tesla, Adobe, and the well-known Amazon, and the newly minted Meta, the old Facebook. And then, of course, we have our Micro Crude Oil Futures, which is the focus of today. So I'm going to walk you all through the crude oil futures contract. I'll talk to you a little bit in terms of background on what the product is, how it compares to the product at the CME, and also go through some interesting correlation graphs that I have on this other tab. So Micro Crude Oil Futures, and again, this is all available on FairX's website at fairx.com. As you scroll through, it gives you, just some usual charting. Looking here at the 1 day, the rolling 7 day, you can see that oil has been trading in a little bit of a range the last few weeks, and also actually, frankly, over the last few months. But onto the contract spec. So just to make it clear off the top, many of you, I suspect, are quite familiar with the product at the CME, the WTI full-size product, the physically delivered oil futures, but also the micro CME crude product as well. And our micro crude oil futures really are the same as the micro product at the CME. The big difference, of course, is offered through Tradovate. It comes with absolutely zero friction to trade. It comes in the micro size that is, again, the same. It's 100 barrels times the price of West Texas Intermediate oil. So, these specs were designed and written when oil was trading at around $70 per barrel. Right now, it's a little bit over $80. Again, the trading hours are Sunday through Friday. So the market opens up Sunday evening at 6 p.m. Eastern time, 5 p.m. Chicago time, and trades for 23 hours through 5 p.m. Eastern and 4 p.m. Chicago. The minimum price fluctuations, the tick sizes are all very easy to understand, very standard. Again, pretty much the same as the CME product, excuse me, with 0.01 index points being the minimum price variation, with each one times 100 barrels equal to a $1 move. The product code is oil. The front month contract is currently for December delivery. The code is OILZ. You'll see that live when I show you the product on the Tradovate front end. We list the two nearest contracts. Typically, we'll see most of the volume in the front month, and that's what I will be focused on. Again, it's completely financially or cash settled. There's no issues of physical delivery. I'll talk a little bit about what some of you might remember happened at the start of the pandemic back in March, April of 2020, when futures prices for oil actually went negative going into the settlement. And, all the other specs are basically more or less standard. So as I switch to a couple of the charts that we prepared, the first one simply looks at the Bloomberg Commodity Index versus crude oil daily price. You can see that it correlates quite highly. Again, you would see the same thing if I were graphing the CME, the NYMEX crude contract. You'll see right here, this is where the pandemic starts. This is where you had that oil futures crash that took oil negative down to -30, and then you'll see that it actually recovers and starts tracking the index after that. So this was one of these situations, and I'll talk about it for a couple of more minutes, where because of the physical settlement nature of the parent contract, if you will, the big crude contract at the CME, in this situation right after the pandemic with the market tanking, and you'll see right here, this next chart shows a correlation to the S&P 500 versus crude oil, and you'll see the market here in blue also crash around that time. There was this rush to avoid physical delivery, and so unprecedented, crazy downward pressure on the price of futures, and you had all sorts of incidents at that time, but they actually traded negative before recovering immediately after. So this is one of those things that is a very unique point in time. It's not to suggest that oil would have or should have traded at a negative price, but this is an interesting example of market dynamics that actually caused oil prices to go negative. One of the other interesting things that I wanted to point out about oil as a commodity, as a product, and some of this you might know, is if you go back far enough, and this chart only goes back to around 2005, so a couple of years before the financial crisis, you'll see that there was almost a negative correlation between the price of oil and the price of the market. So if you were around and kind of watching things back then, oil was almost considered as a safe haven asset, almost similar to how you would look at gold or silver, and how some people these days look at Bitcoin. It was often the case that if the market was trending downward, oil was trending upward, partly because the common wisdom was oil was kind of a representation of a commodity that it was somewhat immune to the general cycles of the economy. People still need to drive, things need to be transported, military spending will continue apace. And then what you saw happen, and this is true both as I scroll down a little bit here to the NASDAQ 100 versus crude oil daily price, what you see happen is that after the financial crisis, a switch between the two, when you get past 2009, 2010, what you'll see is you'll see a convergence between the price of oil and the general market, where oil becomes more of a supply-demand driven commodity in the way you could argue it always should have been, but oil becomes almost a parallel reflection of the dynamics of the overall economy, the world economy, and the stock market in general. So you see the correlation go up quite so high. And this is one of the reasons why I wanted to go back and show you a longer time frame. And moving forward, this is one of the ways that oil can be used as a trading product right alongside the popular equity index products on the broad-based equities market and the technology market. Again, both products that FairX also offers. And as we look towards the future, and some people are predicting higher interest rates, potential recession, the current inflationary pressures, oil is an interesting commodity to look at as potentially a hedge and potentially a bet, just based on what your opinion of the future performance of the economy and the market, and not simply the basic supply and demand for oil. This one last chart I wanted to show you, excuse me, is kind of a fun one. We also put together a graph of Tesla stock versus the oil price. We only took it back to 2019, but you can draw your own conclusions. You still see the oil dip here back in 2020, and you'll see obviously Tesla continuing apace and kind of being the market's view on the adoption of electric vehicles. But also, Tesla obviously represents a lot of things to a lot of different people. But what I think is actually most interesting about this particular chart is that you don't see oil, in many ways responding negatively to Tesla. If anything, this reinforces the idea that oil kind of tracks the overall economy and points to the fact that even as electric vehicles are selling more and becoming a lot more common, especially depending on where you live. Where I am on the East Coast, there's a lot of Teslas driving around. It's becoming almost as common as any other type of car on the road. But as you look at the broad economy in general, you'll see that there is continued demand for oil, and it's just a daily reminder that not only has the oil industry adapted pretty well to the supply and demand dynamics of the general economy, it's just a reminder that oil is not simply the base material for gasoline, that it is still used in all sorts of other products, whether it's plastics and other types of fuel. And chances are that for decades to come, it will still be reflective of the economy at large. Although, depending on who you talk to and depending on your own personal opinion, some people predict that there will be an inflection point over the next several years, at which point oil usage will start to decline. Demand for oil will come down. It'll be interesting to see how the supply and demand economics of that play out in the price of oil. So that, I know that's a lot of background. Hopefully you guys found that interesting. wanted to spend the next few minutes before we get to Q&A actually looking at the product itself. So here I have the familiar Tradovate screen. Here is our oil contract. Excuse me. Right next to it, just for full transparency, we're not pretending that the oil contract at CME doesn't exist. So I have it here side by side, MCLZ versus our contract. Our contract is only a couple of weeks old. We're already seeing pretty good liquidity. As you can see, it's 1 or 2 ticks wide, basically most of the time. I have it down here as well in my symbol list. And as you can also see, I also have this position that I put on. I must be a fantastic oil trader because I actually took a negative bet on oil. I sold a massive number, 32 contracts, and it looks like I'm actually up about $1,500, which is fantastic for me. Although, as a reminder, as an employee and an exchange official, this is a completely simulated account, and sadly, I'm actually not allowed to trade the product. But as a reminder for you Tradovate users, again, there are no market data fee charges. There are no commissions associated. There's literally no friction. And if you actually do have a position, whether you're short or long contracts, what's great about the micro contract, and I'll quickly go through some of the other contracts that we have. This is the Bloomberg US large cap, which is our nano size broad-based contract, always very liquid, always 1 tick wide. This is our super tech contract, also just a penny wide. And those contracts actually come in 2 sizes, where they come in the micro size for both the Bloomberg large cap, which is the 500 component broad market index, and the super tech index. Excuse me, don't have it at the last price here. So the oil contract comes in just the 1 size in the micro contract. What's fantastic about this size, as many of you probably do already trade micro contracts, hopefully some of you are trading our B5 and our tech contracts as well, is the scaling that it allows you to do. And when you don't have commissions or any other charges to contend with, you can hold positions overnight. You don't have to focus as much about getting in and out of the market every single day. You can go long, short, and then decide to trade in and out. So for example, right now, I am short 32 contracts, and let's say, I'm up here $1,500 worth, and I decide that, I actually want to get out of 5 of them and size my position down. So, just buy 5 here at the 881.15. You see my position go lower, so I'm still out there, and I've just shortened my position. And again, this allows great flexibility for you as users, again, in this micro contract, but also in our other micro and nano contracts, to size your positions, really manage your exposure, and be able to really express your views in a much more precise level of market exposure than you would with a much larger contracts. And that's really what FairX is all about: lower cost, smaller contracts, easier to understand types of trading, and why we love our partners such as Tradovate that are offering our products in a zero commission environment that really allows you to express your views and not have to be so focused on the in and out costs of the positions, and really just focus on pure trading and pure trading results. All the other functionalities, like bracket orders and all of that still functions. Not going to belabor the point of how those work, but you guys all know how to use those order types. So really looking forward to this contract growing. We're doing several hundred contracts a day already, and growing every day as more and more Tradovate and other users come online. Wanted to thank you guys for joining us in the middle of the day. I really enjoy doing these with the live market, not having it pre-recorded. So we're not picking a specific day and time. I did put this trade on a few days ago It could have been a loss, although I guess for all you know, I could have had all sorts of losing trades in this account that I wiped clean before the webinar. Next one I do, I promise I'll have some losers in my position list as well. But anyway, thanks again. Happy to move to Q&A if there are any questions.
All right, Boris, thank you so much. That was great, very informative. There have been a few questions that came through. One of them, I think you kind of went through it as we were looking at the platform, and you were looking at the two tabs up there, the oil, the FairX oil, and the Micro Crude Oil. What's the main difference between the two of them?
So there really aren't any differences in terms of the contract design. They really are the same exact thing, and frankly, the biggest difference is that our product has virtually no friction in terms of trading, because Tradovate is offering our contracts with zero commission. So it's just simply a lower cost way to trade. And as we have more liquidity providers and as we have more clients come online, and we've seen that over the past couple of weeks, we anticipate that our liquidity will continue to grow as well, even beyond the already pretty good markets, 1-2 tick wide markets that you're seeing right now.
Yeah, and one other thing as well for Tradovate account holders, the day margin on the FairX, the oil contract, is also $100 per contract. So that's identical as well as the Micro Crude Oil.
That is correct.
And yeah, let me see. There's a few more questions that came through. This one, not necessarily relating to the oil contract. Someone's interested in knowing if there's other contracts that you might be launching. Any plans, perhaps?
Yeah, you know, we're very much looking at the crypto complex. So that's something we're looking at over the next couple of months. So that should be very exciting for us as we head into the new year. We're also looking at silver and gold contracts, which would be structured again similarly to the contracts available at CME. And one other contract we're pretty excited about that you should see in the early part of next year is the Bloomberg 100, which is another index from our friends at Bloomberg that is 100 top capitalized companies from the NASDAQ. It will be very highly correlated. It's a different index. There are some interesting differences between the two benchmarks, but it will be highly correlated to the NASDAQ 100. In fact, our FairX SuperTech contract is fairly well correlated to both the S&P and the NASDAQ 100. Not so much on a tick-by-tick basis. It really is very tech heavy. So on days that Tesla moves a lot, that contract will move. Over the long term, it correlates quite high, very similarly to how NASDAQ and S&P, but on a day-to-day basis, it does offer that special kind of exposure if you're specifically interested in the biggest technology names.
Okay, very good. And is there any idea about the market data? Right now, it's free. Are you planning on keeping that free for a while? Is there a timeline?
Great question. We have no plans right now. You know, it's a very important part of our model is to grow the retail pie, to attract as many retail traders as possible. It is absolutely not right now within our plans to ever charge for market data.
Okay, that's good news. And during the non-US day hours or the overnight session, how is the liquidity? Do you see traders trading this new oil contract?
We are starting to see a little bit of overnight activity. Excuse me. You know, oil in particular is not as much of a a daytime versus nighttime, U.S. hours versus European versus Asian hours. There is very decent liquidity throughout the night session. There's a little bit less interest naturally, but the market quality that you're seeing right now on the screen, you should expect to see the same. And in fact, what's interesting is that in our equity products, where typically you might expect to see less liquidity when the stock markets close, both at 4 o'clock Eastern time, but then also for the night session after the late sessions are closed at 8 p.m. Eastern time. So we're seeing very tight markets throughout the night, maybe slightly less depth but both in our Bloomberg large cap and in our super tech nano contracts, you're still seeing one tick white markets, even at 2 in the morning, 4 in the morning, et cetera. And as oil develops, we should see the same exact thing. And in fact, not that you guys would be paying attention to our announcements, but we recently announced another major liquidity provider that will join us later this year or in January in all of our products. So you should see our markets continue to get more liquid and tighter.
Okay, very good. And one question came in here. They typed in oil, but they weren't able to find it. So basically, to search for it currently in Tradovate, you just put in oil, and then you put in the month code as well, the Z. Just put in oil and then Z1. Basically, that's the current contract.
Yes. So that's hopefully our friends at Tradovate will help potentially change how the search function works. I think right now maybe it looks for the most commonly looked at products. One of the other ways, and you'll see me do this, is you can type in FairX as well, and it will list all of our products together, or you can type in oil Z for the front month. But yeah, that's true. That is an interesting issue here, is that if you just type in oil, it doesn't actually come up. So we'll see if we can address that together with our friends at Tradovate.
Yeah, that will be. It's on the. I think it's going to be available fairly soon. Maybe the next update will.
Yep.
So you can just type in oil, and it'll be the first one in the drop down to show up. So, yep, that's correct. Let me see if there's a few more questions, perhaps. Yeah, that's also more of a Tradovate specific, but that in the dome where you see that that highlighted yellow, that's the last traded price. And correct me if I'm wrong, Boris, but really what you're looking to is the spread, right? Between the green and the red, essentially, or between the where the limits are. That's the spread, the tightness of the spread, I suppose.
Yeah, that's right. As our products is brand new, it's traded about 180 contracts a day so far. You will see in the early stages, sometimes the last traded price will not necessarily be where the actual market is. But this, where if you can see my mouse moving, where you see the market at 8109, 8110 by 8112, 11, this is really where the bid ask is and where the tradable prices are. So if I buy a little bit more back of my positions, that is those are the tradable prices. Now, obviously, again, just as a reminder, because my trading is simulated, it does not generate a new last price. Because this 8114, although now it looks like it just traded at 8116, that is an actual real trade that just occurred in the market. So unfortunately, my fake trading is not generating real last sales.
Excellent. Okay, that's good to clarify that too. I think that's basically all there is. There's quite a few questions. That's good. I'm happy to see there's an interest in this. And like you said, Boris, really if you're used to trading the micro crude oil, then this is going to be very much the same procedure. So it'll be a very easy transition if you wanted to trade this contract, this FairX oil contract. It'll be very much the same.
It really is the same. It settles to the same value as the CME. Frankly, the only difference is the zero commissions and the free market data.
Yeah, exactly. And it especially adds up when, like you were saying, you can scale in and out of trades very easily with micro contracts. The downside with micro contracts is that there are always those fees, which with FairX isn't the case. So that makes the barriers to entry quite a bit less. And like we were saying in the previous webinar, every dollar you make is what you get. It's not like you're getting dinged for fees and commissions. So it is a big difference.
Yeah, that is correct. And again, just to emphasize that our oil market is just like you're seeing it right now, 1 or 2 ticks wide. It's like that during the evening as well, and overnight. So you should expect to see 100% correlation. And as I switch between these two markets, you'll see that they are trading at essentially the same price.
Yeah, exactly. Yeah, that's great. I hope that we'll see some more people. We already see a lot of traders trading this contract with Tradovate, so that's very encouraging, and hope to see that grow. And we're glad to be part of that as well. But if any questions come up when you watch this, and there's some questions on FairX or this particular contract, feel free to reach out to us. We're always glad to help. As you know, in Tradovate, there's the chat feature on the right-hand side, the upper right-hand corner, so you can send us a message through there. You can give us a call or send us an email, and we're glad to help. If you are testing out the platform, these contracts are also in the trial, the 2-week trial that you'll get, so you can test all of these FairX contracts out in the demo environment as well before opening a live account.
Thank you so much for having me again. Thank you to Tradovate, and thank you to all of you participants who took a little bit of time out of your day to join us. Thank you.
All right. Thank you, everyone. Have a good day.